recent extreme weather events are a clear sign that the world has been sleepwalking towards the crisis that is man-made climate change. If we want to meet this challenge, then greening the global transport sector, which the UN Environment Programme says is the fastest growing greenhouse gas emitting sector, is vital. That is where electric vehicles come in as the chief instrument. The extent of their adoption in India, which is expected to be the fastest growing major economy in the years to come, will in many ways determine whether that goal is achieved or not. But India may fall short of its ambitious targets. According to the Niti Aayog, if the FAME 2 program and other measures are successful, India could have 80 million electric vehicles on its roads by 2030. But an analysis by Climate Trends and JMK Research says that the country may only be able to reach 50 million EV sales by 2030, falling 40% short of the Niti Aayog's projections. One of the reasons could be that in the price-sensitive Indian market, purchasing costs have continued to be a problem. Goa's power minister, Sudhin Dhavalikar, has a solution. According to him, once their batteries are manufactured in India, the cost of EVs should come down by half. So, it is imperative that India become a major EV battery maker. But that's easier said than done. While technologies like green hydrogen are also being explored, they are still in the nascent stage. At present, the most common type of technology used to power electric vehicles and for energy storage are batteries made of lithium ions. They also contain other materials like nickel, manganese, and cobalt. They convert electrical energy into chemical energy, allowing for the storage of electricity in a very dense form. And they will remain the key drivers of green mobility going by their projected demand, which will reportedly jump 17-fold from over 500 gigawatt hours in 2020 to 9,300 gigawatt hours by 2030. And that presents a significant challenge for India becoming a global EV battery maker. According to government data, as of July, no reserves of resources of lithium-bearing metals were part of the national mineral inventory, while the presence of lithium resources amounting to 1,600 tons has been detected in Karnataka. They fall in the inferred category, and thus the associated confidence level is low. Therefore, India will have to largely depend on imported lithium in the near term. India's imports in this category in FY21 stood at almost 9,000 crore rupees and increased to almost 14,000 crore rupees in FY22. China and Hong Kong were the major sources of imports. This has also exposed Indian industry to price volatility, with prices of Chinese lithium carbonate increasing by more than 400% in the past 1 year due to demand outstripping supply. To address this problem, the government recently initiated talks with a number of lithium-rich countries to supply the mineral to Indian companies. The Ministry of External Affairs had held a meeting with the ambassadors of Argentina, Chile, and Bolivia, among others. But Akshay Singhal, the founder of Log9 Materials, which makes batteries for EVs, says that the government's approach in this matter is still passive. Singhal explains that most of the other EV markets, like the US and China, already manufacture lithium-ion batteries. Thus, they can immediately use the lithium. But India, which doesn't have active manufacturing at present, can only make promises and speak about future sourcing commitments once manufacturing goes on steam.
One way to kind of break that kind of a issue and also to secure supply chain in long term is to get into this play, create stockpiles, strategic stockpiles, wherein we start to buy these materials. So basically, they start supply chain, they start the inflow of lithium and other critical materials required for lithium-ion manufacturing, and strategic stockpiles are created, which once large-scale manufacturing comes up in the country, can be sold to the industry.
In August, Hyundai Global Motors Private Limited withdrew from the production-linked incentive scheme for advanced chemistry cell battery storage worth 18,100 crore rupees. The move came after it emerged that the South Korean automobile major Hyundai Motor Company was not affiliated with Hyundai Global Motors. Back then, it was reported that the government would allocate the 20 gigawatt-hour capacity awarded to Hyundai Global Motors to Reliance New Energy Limited and Mahindra & Mahindra. Apart from these two firms, the government has signed agreements with Rajesh Exports and Ola Electric Mobility Private under the PLI scheme. The participants are expected to create a total advanced battery manufacturing capacity of 95 gigawatt-hour. Meanwhile, the center will reportedly notify another PLI scheme for more advanced EV battery technologies, like solid-state batteries, soon. According to reports, at least 6 companies are in discussions for the additional scheme. While these are encouraging developments, India has a long way to go. First, a report by management consulting firm Arthur D. Little says that India will need to invest more than 82,000 crore rupees towards cell manufacturing to meet just the domestic demand for lithium-ion batteries by 2030. And remember, success as a battery maker will involve tapping into global demand as well. We also do not know how successful India will be in following China's footsteps, which became a dominant player in the EV battery space by mastering each part of the supply chain. A plethora of policy interventions may be required. Greater collaboration between the government and industry will be necessary. The government will need to bring in comprehensive policies addressing the entire EV battery value chain, from the acquisition of raw materials to even the recycling of batteries. Tax subsidies and the establishment of lithium parks to boost investments in raw material refining and cell manufacturing will also be necessary. More investments in allied sectors are also needed to increase demand for EVs and make battery manufacturing more economical.
Bottleneck one is the energy infrastructure. When you're buying an expensive passenger vehicle in the US, you can afford a large battery. You have the ability to park this at home and charge this at home. So, going electric is far easier. When you suddenly look at India, you realize that most people can't afford a large battery, right? Because of the price sensitivity. So you would realize most segments in India can only have an 80 or 100 kilometer range battery. Beyond that, it makes the vehicle prohibitive to own. At the same time, I don't park at home. A large portion of India parks on the roads. Right? So how do I park and charge overnight? So suddenly I need public charging, the reliance on public charging. And I think different people are solving for that, maybe a swap solution or a rapid charging solution. And I think that's needed to really unlock the 90% of the Indian market.
While Australia and South America are the largest suppliers of battery-grade lithium in the world, it is China that controls the midstream. That involves processing the lithium into hydroxides and carbonates, which are then used in cell factories. So, the next steps by India must focus on the entire EV battery value chain in order to break this hold.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.